Hey guys, it's that Dividend guy coming at you with another list. 3 stocks to buy with dividends yielding more than 4%. So, guys, this is one for the people who want higher yields. Some people don't care about that. Some people are more worried about the CAGR. But today we're going to go over 3 stocks to buy with dividends yielding more than 4% according to the Motley Fool. So dividends can provide an important source of investment income to a well-diversified portfolio. However, as with any investment, you need to take prudent steps to ensure that dividend stocks that you're choosing are actually a good choice. Merely investing for the highest yielding stocks is not enough. It's important to do your homework and know why a stock's yield looks attractive. The yield could be high because the stock price has fallen significantly, or it could be high because the management is making poor decisions about how to distribute its excess earnings. Or the excess earnings have fallen, but management isn't adjusting the dividend to match the new lower earning levels. Fortunately, there are companies that are doing it right and yielding and earning enough to bump up the yield and reward shareholders. Let's discuss 3 real estate investment trusts that dividend-seeking investors should consider adding to their portfolios. Guys, REITs are really a dividend investor's dream. They have to legally pay out 90% of their earnings, and they get special tax cuts because of it. So this is pretty much you being a landlord without all the headaches of being a landlord. So first is American Campus Communities, ticker symbol ACC. It's a large owner of student housing, while the REIT's earnings were hurt by the pandemic, of course, which forced many colleges to send students home. This is a resilient business that more often has steady occupancy. In fiscal 2021's first quarter, American Campus revenue fell by about 7% year over year to $232.7 million, and its adjusted funds from operations, FFO, a key metric used by REITs, dropped by 19%, but the company did collect over 97% of its rent due. That's phenomenal, guys, especially given the fact that a lot of schools pretty much closed down and went to virtual learning. The fact that they, seem kind of unaffected. 97% of their rent is really good, especially during a pandemic, because if they were sending students home, less people would be living in those campus communities. But this is a really good point to make as well. If you're thinking about REITs, people got to live somewhere, right? People have to stay somewhere, whether it's an apartment, whether it's, campus community for students, whether it's mobile homes, whatever. Everybody needs a place to live. And so you can take advantage of that and buy a REIT. That's really it's really simple. It's easy to understand. People need a place to live. People are going to pay me rent. So 97% occupancy, or sorry, 90% of the rent was collected. That's phenomenal. That's really, really good. So that's a definite key metric to look at. However, management saw improvement in leasing activity for the fall semester, and I am optimistic that occupancy levels will increase. As the vaccines get administered, colleges increasingly require students to receive the vaccine to attend in-person classes, while American Campus Communities kept its quarterly dividend the same last year at 47 cents per share. It didn't cut the payment as many other REITs during the pandemic did. That works out to a 4.1% yield. So, guys, this is really important as well. A lot of REITs, when something like a pandemic happens, cut their dividend, and that's expected. Like I said, if people are going home, if people are getting sent home from campuses, they're not going to be collecting as much rent. But as you guys saw, 97% occupancy, so people weren't going to class, but they were still living in the dorms, were still living in the campus communities. So they didn't lose a lot of rent, 3%, but they didn't cut their dividend like a lot of other places, like a lot of other companies did. And again, that should be something that's very important to you, because that means that even during a pandemic, your cash flow, if you're dependent on these dividends, or you're looking for dividend stocks that don't cut their dividend, take a look at the ones that held steadfast through this pandemic, because that's a really good measure of a quality company. And it's good to know what companies are dedicated to paying you through a pandemic, which apparently ACC is. Next is Medical Properties Trust, ticker symbol MPW. It leases its properties to healthcare companies. 3/4 are general acute care hospitals, and the rest are emergency care facilities, rehab facilities, specialty care hospitals, and behavioral health properties. Since people need care no matter the state of the economy, Medical Properties Trust is a good position to continue collecting rents. You can see this by looking at its results. Fourth quarter revenue was 338.8 $333.8 million, up more than 30% year over year, and adjusted FFO was up by 22%. Medical Properties Trust typically increases its quarterly dividend modestly every year. The company hasn't disappointed recently. The board of directors raised April's payment by a penny to 28 cents per share, which works out to a yield of 5%. So guys, just like I said with the first stock, being people need a place to live. People need medical care. Regardless of the economy, people need medical care. People are going to get sick. It's something that you can definitely count on. People are going to pay their insurance. They need insurance. People are going to pay their light bill. People are going to buy food. People are going to use water. People are going to produce waste. There are certain things that people are just going to do regardless of the economy. And these are the types of stocks, of companies that you should be looking for. This is a great company. Obviously, medical care is not going anywhere. If anything, it's going up. You might have to worry about, say, government, coming in and changing some of the practices or something like that. Maybe changing the insurance policies. But 100% that a REIT that owns emergency care facilities and hospitals is going to be okay. It can't fail because people need medical care. And last but not least is one that I personally own and I can vouch for because I love this one. Realty Income. If you're looking for frequent dividends, Realty Income, ticker symbol O, which makes monthly payments, fits the bill. It rents its nearly 6,600 properties primarily to retailers. While the retail industry has been designed by online competition, such as Amazon, Realty Income offsets its risk by renting to large, financially strong companies like Walgreens, Dollar General, and Walmart. Despite the pandemic hurting its movie theater tenants 5.6% of annual rent, Realty Income's occupancy was about 98% at the end of 2020. The fourth quarter rent collectors were almost 94%, and it grew by over 5% year over year to $4.18 million, driving adjusted FFO 5.6% higher. Realty Income has a history of increasing its dividends annually, having done so for more than a quarter of a century, making it a dividend aristocrat. In January, the company raised its monthly dividend payment from 23.234 to 0.235 per share. The yield works out to 4.1%. Excuse me. Guys, this company pays monthly. So this is the number one retiree stock, which means everybody that's retired pretty much owns this company. That's because they get consistent monthly income from this stock. And it doesn't just do it yearly. They increase their dividend every quarter. So you get a quarterly increase, even though it's like 0.2 cents or 0.4 cents. It usually works out for the year for up to a cent. But think about it, guys. These are three quality companies. Do you think schooling's ever going to go out? I think no matter what, every generation is going to, I would argue, every generation is more likely to go to school. And American Campus Communities is literally campus communities on school property. So they're not going anywhere. Students need a place to live, right? That's a no-brainer. Also, medical care is going nowhere. So MPW is going to make money. Also, people are living longer. They need more. So people are living longer, so they need health care, medical care longer. So this rate will 100% cash in on the aging population and the the increasing life expectancy is just going to help something like Medical Properties Trust. And then, of course, my personal favorite on the list, Realty Income. They are triple net lease, which means that they are not responsible for the upkeep of the building. That falls on the tenant. They're known for increasing their dividend on a yearly, but quarterly basis. And they have some of the best retail in the world when it comes to tenants. They listed Walgreens, Dollar General, and Walmart. So guys, let me know if you own any of these REITs. I think the Motley Fool is 100% right. These are definitely three stocks to buy with dividends yielding more than 4%. I personally own one of them. I will not be buying AAC or Medical Properties Trust, but I honestly, they're easy to understand businesses. They're no-brainers. Students need a place to live. Medical care is not going anywhere, and Retail is declining, but if you actually look at Realty Income's tenant base, they're phenomenal companies. So if you want to be a landlord without being a landlord, REITs are a great way to do that. And personally, like I said, I own Realty Income. It is my favorite real estate stock. So let me know what REITs you guys own. If you own one of these three, let me know. I think that Motley Fool chose some quality companies here. So with all that being said, guys, thank you so much for watching. Remember to hit the subscribe button. And when you do, hit the bell notification on my channel, that Dividend Guy, so you don't miss any updates. I post a Robinhood portfolio update every Monday through Friday. I also have been doing list videos. I have other stuff in the works, like the new series that I want to start. I want to do one called the products of, and show you guys the list of products from other companies, from big companies like Kellogg's, Procter & Gamble, 3M, Coca-Cola, Pepsi, Dr. Pepper, and show you guys the product list of those companies. So I have a lot of content coming. So thank you guys so much for watching, and I'll see you guys tomorrow with another list video. Take care.